Hello and what is going on, lovely people of the internet? It is Hoop Money here, back again with another stock analysis for you guys. Today we are going to be going over the stock Skillz, or SKLZ. This stock is a great stock and we're going to get into that today, but if you haven't already, make sure you subscribe to this channel and turn on post notifications because I make content like this every day and I really like doing this, and I have 2 degrees in finance, so I can give you guys information that you guys might not have the capability to understand with a full grasp. So that's why you subscribe to this channel. You see more videos like that, we both win. Alright, and if you haven't already, make sure you like this video. Liking the video is actually the #1 thing you can do for someone like me because it exposes my video to more people. It makes my search ranking much higher on the list than other videos, and if you really do appreciate my content, then the least I can ask is for you guys to like the video. And that all being said, I really like the stock Skillz. It's in a nice niche market in the mobile gaming industry, and we're going to be talking about whether or not it is a buy, and we're going to be giving some predictions for the future. So we're going to get right into the video. So Skillz is a mobile gaming development platform where individual developers can create games using Skillz proprietary software. These games have an implemented esports element to them where players can wager money in the form of tournaments or other game modes, and the winner takes home a pot of those earnings. They have multiple game formats, and tournaments are the most popular. Their mission statement is that we are founded on one simple belief: everyone loves to compete. Gaming is becoming one of the most dominant entertainment choices for young people and older people, and mobile gaming is a great way to capture the entire community because everyone has a mobile device. The only other entertainment industry that is outpacing it is television, and I find it really impressive that gaming has actually outpaced music and movies as an entertainment. This platform is growing at a very rapid pace with a 78% year-over-year growth in entry fees. These are the fees that users pay in order to enter into these esports competitions. Now, these are the fees before earnings are paid out, so they do not capture all of these fees. With that, they have a 95% increase in year-over-year revenue, which is amazing. We love to see that with a rapidly growing company. With a high growth company, I find an increase in revenue to be one of the most important things to see on an income statement, as we also like to see them investing a lot more in their company so they can grow in the future. And they've also seen a 121% year-over-year growth in paying users on their platform, which really shows the increased demand of competitive gaming. This company also has a lot of cash on their balance sheet. Almost their entire balance sheet is cash, and they employed no debt, and this shows that they have plenty of capital in order to increase their investments going forward. In 2019, this company was ranked number 31 on CNBC's Disruptor Company list. Kathy Wood loves this stock. We've been seeing her add this to ARK Invest's portfolio constantly on the dips, and she even sold some of her bigger name items like Apple, Facebook, etc. to buy a stock like Skillz, which shows she believes in the disruptive innovation of this company. Something that has been worrying investors lately is the higher interest rate environment will hurt growing companies. Well, this company has absolutely zero debt on their balance sheet, so they will not be having to pay higher interest rates on debt in the future. Higher interest rates will also have an effect on this company due to the opportunity cost of capital, and also if they do want to employ debt in the future, they will have to take on those higher interest rates. Their system of freelancing developers allows them to scale up their platform infinitely with any developer who wants to use their platform, as well as allows them to save on costs of hiring in-house developers for their games. It is also evident that they capture a huge demographic with the mobile gaming industry. People of all ages, genders, and races love to use mobile gaming, and there is data to back this up. They also use an analytics software to determine what works the best and how they can capture the most revenue in the future. Although people will pay money to compete in mobile gaming, the future of esports really does lie in the PC gaming industry, as they have much better hardware capabilities than mobile gaming. Comparing an iPhone to an RTX 3090 is like the Super Bowl being played at your local high school rather than an NFL stadium. There is a big disparity between mobile gaming and PC gaming. Esports platforms such as Twitch rarely ever will see mobile gaming on their platform, and it is nearly all PC gaming. Even the people that would like to use controllers to play their video games actually end up buying a PC to do so most of the time if they are successful, because it allows them to showcase their skill while also taking advantage of the benefits of the hardware and software implications of PC gaming. This company seems afraid of employing debt, and they would rather dilute their shareholders by raising extra equity instead of using debt to gain extra leverage in their company. Debt can actually be a really good thing for a growing company, because if they have revenue, they can usually cover the interest payments and use that debt to actually expand their cash flow. And a simple example for people who are stock trading would be, if you take on margin, you can get higher returns on your equity without spending as much money. So the same thing can be said for a company. If they use leverage, they can achieve higher returns. Debt is not always this bad thing that it's made out to be. It can actually really help a growing company. So in the future, I would like to see Skillz use debt instead of diluting their shareholders further, because as a shareholder, I want to capture some of those returns and not be diluted. Wolfpack Research recently put out a short seller report where they said this stock is not growing and it is very overvalued due to the SPAC mania that we have seen lately. Skillz is currently sitting at only a 7% short float, and many people disagree with this short selling report, so I wouldn't pay too much attention to it, but it may be worth the read if you're invested in the stock. That being said, they are sitting at a $9.37 billion valuation as we speak, so a lot of their future growth is being priced into the current share price. However, I think it could be justified because this is actually a really highly growing company. I say if you are trying to get into this company, perhaps wait out the next few months, because a lot of growth companies have seen a lot of volatility, so it would be a good idea to maybe see where it settles out before getting into this company. A lot of their revenue lies in a small amount of games, so if these games did see a decreased attraction to them, then the company could take a big hit in revenue. And this company also heavily relies on Amazon Web Services, so if anything happened with their relationship with Amazon, the company could be negatively affected. Moving over to finviz.com, we can see that this stock has seen a big run up in the recent months. Currently, Skillz is trading at $24.25 right here at the bottom of its channel, so it may be a decent entry point short term. However, it is in a descending wedge pattern, so it may be a good idea to see how that plays out and maybe find a breakout opportunity in the future. So I actually am invested in this stock. I bought it at roughly $25 a share. I like to invest in these high growth stocks where I do see opportunity in the future. So I do like this stock. However, if you were to get into it today, I'd recommend to wait for this whole interest rate debacle to settle down a little bit, because that's where we'll see the price settle down and its fair value will start to come out for real. Right now, it's a very volatile environment, so it's hard to tell whether you're paying a good price for this stock or not. The gaming industry is definitely something you want to have exposure to. You just have to pay attention to valuations to know that you're getting a good deal or not. Gaming is definitely the future of entertainment, so it is definitely important to have exposure to this sector when you're investing in the stock market. I recently talked about Roblox and how I thought that stock was very overvalued, so definitely pay attention to these valuations because a lot of them are very high. And I think Skillz is currently sitting at a very high valuation. However, I do see the potential growth, and I think they're still at the early stages of growth, so I think it's still a pretty good stock to have. That all being said, if you guys have not already signed up for WeBull, you can do it using the link below, where if you deposit $100, you get 2 free stocks valued up to $1,600 a stock, so it is definitely a good deal. You lose nothing, you gain everything by doing it. So yeah, go ahead and sign up with the link below. And that is going to be it for the video today. I am excited to make these videos. I'm excited to get back in the studio later and edit these videos. So if you guys can please leave a like for my due diligence on this stock. If I helped you make a decision on whether or not to purchase this stock, or if I helped you learn something new today, definitely leave a like on the video. It'll be highly appreciated. That's going to be it for today. Peace!